Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So everybody guys, today on the gold market we have a bit more information, despite the market stands flat, but also sometimes this is also information for us because how market reacts on the major resistance areas and major targets, it also gives us a lot of knowledge what is going on and what really could happen in the nearest future. So actually on the daily chart, recall our recent discussion that here are two possible ways of market reaction. It could be straightforward to the downside based on this harmonic swing, or it could be minor pause in upward direction, just a respect of the intraday target, this large A, B, C, D pattern, 1750, minor standing, and then upward continuation, at least to the 1770, but it also could be further upward action. Currently, based on recent price action and some more moments that we see on the intraday charts, we suggest that the second scenario is more probable. The market will show this tight consolidation, very small, and then continue upward action. Why I would think so? So take a look what is going on. First of all, here it's very weak reaction. On the 4-hour time frame chart, we could meet the same stuff that was here. Last time we said that, guys, take a look what's going on. In fact, market stands at the very small retracement, just the 30%, the same time as it was standing in upward trend. So if you calculate the number of candles here, it's almost the same as of the upward action. It means that a lot of buyers step in at this level and doesn't let market to drop further. So all sell-off that stands here is buyout. The same is here. Market shows retracement, but it's very small. It's not even 30% of this move. So actually, it's approximately the same as it was here. It's minor harmonic swing. Market stands in very tight range, shows no significant pullback. That suggests that chance of the upward continuation really significant. Here is actually you could recognize the same bullish dynamic pressure as it was here. So for example, if you plot the MACD predictor, you will see that here's take a look. Market turned trend bearish, stands flat, upward action. Here's again trend turned bearish, market stands flat, forming high lows. It's the same as here, and it suggests that market really could show the upward continuation. The one problem is that market stands at the bottom on the weekly. So, well, currently it stands below the top that has been achieved, and I think that $20 to the 1770 it could pass a bit more. So as it already stands significantly above the weekly overbought. So that's not really big distance for the market currently on the weekly chart. So maybe it will happen today, tomorrow, I don't know. On the hourly chart is also some signs. So take a look. Recently we talked about the hand and shoulders, and indeed it has started to work very nice. So if you have taken the short position here, you had a lot of time to move your stops to the break even, because right at this point, taking the short position at this level, you can see first pullback, second pullback, but now you can see market is coming to the break-even point, and this is not the type of the behavior you would like to see on the hand and shoulders. On the hand and shoulders, this part of the action should be controlled by the bears, and it should not stand too long in the right arm, coiling around the neckline, showing the second pullback. So this is bullish type of action. Also, we've got yesterday steep bullish diversion. So take a look. This is the MACD. It suggests also taking out of this stuff. So currently, as you can see with this cross sign, I have marked this downward leg, which we think that probably it will not happen. And currently, it would be better to consider possibly taking the long position for scalp traders. On a daily chart, there's still nothing to do just because of the weekly overbought. So for the daily chart, we need more significant pullback, some more reaction from the market. But the fact that market stands in the long-term bullish trend on the weekly chart, on the monthly chart, this is probably, we could say, that's definitely so. Market shows really fast and strong action currently with the very small reaction on any resistance. So reaction on the overbought is also really very weak. So even when we have the weekly overbought, response of the market is very small. It just suggests that some hidden strength exists in the gold market and significant interest, and we talked about in the weekly report as well, guys. So every time I am talking about the weekly report because, well, every time we're considering this and pointing on these moments. So that's actually our view on the gold. So it's difficult to take the long position immediately here just because of the weekly condition on the daily chart. But at the same time, in the current circumstance, taking the short position, personally, I also not really fascinating with this idea. So this choice is up to you, whether if you are brave enough to consider taking the long position at this setup that we have with the stop somewhere below this area. Well, you could try to do this. If not, in this case, you could turn to the daily chart and see when the market will hit some important target and then just wait for the moderate pullback. That probably also should happen someday. So, well, that's our view on the gold.